Let's take a look at futures. They're pointing to a lower open on Wall Street with technology on the decline. The Wall Street Journal reporting this morning that more investors are looking towards stocks with slower but steadier growth. Cheaper growth. Joining me now, S&P Global Market Intelligence Portfolio Manager Erin Gibbs. Do you think that this trend continues, or do people ultimately come back to technology stocks?
No, I think we've been talking for a while about investors coming back to value stocks. There's been a change in leadership. Even last week, we really saw value pick up over these higher price growth stocks. And part of that is because technology is actually going to have massively slowing growth next year. They're actually going to have below average earnings growth versus the broader market. So people need to start looking in other areas if you're really going to look for where profits, revenues, and earnings growth are going to come from, as well as better valuations.
Well, Susan, I noticed that last week that the Dow stocks that hit all-time highs at the end of the week were Coca-Cola, McDonald's, and Procter & Gamble.
Right.
And that's where the money was.
And investors are going into Starbucks, and Bill Ackman bought a stake recently. But I was really a little shocked by reading the Goldman Sachs report this weekend. They're predicting GDP to be 3.5% this year. That's the best year of growth since 2005. Next year, in 2019, only close to 1.5% for expansion.
Well, part of that is because we are having such a phenomenal year this year that it's really tough to keep up that pace. And we're even seeing that in profit growth, where we're looking at about 23% profit growth this year and 8% next year. And so it's just harder and harder to grow that faster when we're having such a phenomenal year this year.
But if there's a slowdown in the economy, does that impact the market?
Well, and that's exactly what we've been seeing for the past month and a half, is as we're particularly going through Q3 earnings, people start looking at 2019, it's finally on their radar, and they're saying, oh, wow, it's going to be really tough to grow faster next year. There's going to be slower growth. It's still super healthy. We're not talking about, a recession or anything. It's just, it's going to be slower, and you probably want to be a little more cautious about where you put your money and maybe focus on value a little.
Yeah, I think that does raise a question whether people are too cautious. The markets right now, given this 20+% earnings growth, the multiples are not that huge, maybe on some of the tech names, but in general, is there a lot of room for upside surprise here next year?
Look, right now we're trading, what we look at is sort of forward valuations and PEs, and we're trading at about 16 times forward earnings. That is not super cheap. That's actually in line with about your sort of 3-year average. So, yes, there's room to go up. We could certainly go up, 10% from here and still be on a very healthy valuation. But we could also go down to 15 times forward earnings and go down another 5 or 6% and still again be in a very healthy normal range. So there's a lot of possibilities around sentiment, and we'd still say definitely evaluate the value stocks are definitely some of your safer bets if we're in this more neutral territory.
I just want to mention retail really quickly. A big list of companies reporting this week, including Lowe's, Target. I'm looking at L Brands. That is I think they report today.
Victoria's Secret?
Yep. Yeah. That talk about trying to gasp for relevancy there. But anyway, what are we going to see from the retail sector? Will it give us a window into what the holiday shopping season looks like?
Yeah, this is sort of the big report and what we're going to see, look for guidance for the holiday season. Right now, forecast for retail for the holiday season is one of the best ever. We're looking at about a 5% growth just on earnings, and obviously more of it goes to online. What we have been seeing with retailers is those that actually make and manufacture, let's say clothing, shoes, they're getting harder hit. The people that sell it, companies like Ulta that are really able to engage the shopper, they tend to do better, as well as anybody that has a strong online presence. And we're seeing, different ways to deliver the product to consumers, not just always shipping it from home, being able to pick it up and that type of thing. So we're seeing a lot of creativity. So it's going to be an interesting year, but yeah, this is a very important week for those holidays.
The reason I took a shot at L Brands, it's like super skinny women strutting around in badly made lingerie. I think that's a little outdated. The modern definition of beauty is just not whatever Vicky's Secret is still trying to sell. But anyway, that was my 2 cents.
Agreed.
I'm putting you on the spot, Erin. But let's hope for a nice holiday, because Nordstrom had a bad week last week.
Yeah, they did, and they've been struggling. And they've again, it's being able to deliver what the consumer wants and engage them. These big box retailers have really been struggling, so it's going to be a tough year.
Good to see you, Erin. Thank you so much.